This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I love words like lunatic, because I think lunatic describes a lot of the behavior of people these days, whether you're just talking about life behavior, business behavior, social behavior, political behavior, market behavior. Lunatic is a good word. So as I'm prepping for this podcast, and I knew this is somewhat where I want it to go, because ultimately I want to talk about trend following performance today. I want to talk about a specific white paper called A Century of Evidence on Trend Following Investing that tracks trend following performance back to 1903. Wow, there's some viability there, apparently. But anyways, on the heels of Roger Waters explaining how he composed his brilliant song Brain Damage, talking about he was inspired by watching these beautiful plats of grass that you were not allowed to walk on. And so literally minutes before I was doing this podcast, I get emailed a video, and I just finished watching it, from Seth Godin. So I'm watching, it's about a 20-minute video, Seth Godin talking about, I think the title was called Stop Stealing Dreams, about education. I took a few notes really quick, and this will be somewhat my version and somewhat Seth's version. So as you think about Roger Waters, as you think about his motivation for composing this brilliant song, Brain Damage, Seth walks on stage and he immediately tells the audience, "Good morning, boys and girls." You know, the same kind of nonsense you heard when you were a kid in school as you sat there in the desk. And Godin goes on to explain the number one purpose of school. And I don't think this has changed yet. Seth's ahead of the curve. The number one purpose is obedience. Do as you're told. We are training you to be a robot. So long before the brothers dreamed up the Matrix script, where you're cogs in a wheel, biological cogs in a wheel, Godin's pointing out that school is all about the same thing. Standardized test. Are you serious? I mean, come on. I know there's people out in my audience that are sitting around right now, and you probably still go to cocktail parties, and you probably still at 40-something or 30-something, you probably have friends and associations where you still talk about what you got on your SAT. I'm serious. I bet you do. Come on, don't lie to me. I know you're out there. I know you're out there, and you're weird. You're weird. You've never taken a punch. You've never hit a home run. You've never done anything. You've just bragged about your damn SAT score since you were a little kid. I have compassion for you, though. It's not your fault. At some point in time, you didn't realize that you were put into the middle of a sham, a scam, that you were being trained to be a factory worker. That's all it is. Look, the Industrial Revolution was fantastic, right? Production efficiency, we could all buy goodies, etc., etc. But it was an indoctrination. It was an indoctrination. You're nothing more than a cog in a wheel. Manufacturing jobs. Seriously, can you imagine? Politicians come on the TV and they tell you they want to preserve manufacturing jobs. This means they want to put you into a repetitive motion environment all day long for 12 hours where you sit there like I don't even know what you are, a brain damaged fool. These poor folks that make these iPads and iPhones that we all so love. Have you read the stories about how their cartilage in their fingers disintegrates from making these little devices for $1 an hour? Now, they want to get ahead, okay? And maybe that's the only choice, and I surely don't knock it. But my God, manufacturing jobs? Are you serious? Who in their right mind wants a manufacturing job? No, what you want is art. You want art. I mean, that's the choice, isn't it? I mean, these systems, these manufacturing jobs, these government jobs, they're interchangeable parts, my friends. You can be removed from the system and replaced with another one. You are not important. Roger Waters, once again, brilliant. The Wall was all about the nonsensical nature of an interchangeable part, and that nobody stands for anything. Nobody is about the art. Everyone is about following the rules. Look at my world. following rules. There'd be no trend following education if I followed rules. There'd be nothing. There's 4 books on trend following. I wrote them because I guess I'm slightly off to the center, slightly not all there. Very passionate about getting this message out because you know why? The system that you're up against, this is the Fidelity system. This is the Johnson family, right? They've just got billions upon billions of dollars by having your money sit in their accounts, and they just kind of churn it a little bit. And maybe if the S&P goes up, they'll give you 3 percentage points less than the S&P. And they've made billions off you. Once again, it's the factory worker mentality. Take what you've been given. This is all you deserve. You get no more. This is it. Like I said, I'm paraphrasing this. I've kind of gone off the side here on Godin's presentation, but these factories that he was talking about, the reason school as it's currently organized about obedience, why was it created that way? Factories wanted obedience, and it was all about creating stuff. So the factories created stuff, which in turn trained us to buy stuff. Has anybody yet realized that you're on a freaking treadmill? The old Smashing Pumpkins song, what is it? The hamster on the wheel, the gerbil on the wheel, whatever it is. So what are we left with? This schooling situation. First you have Roger Waters talking about just a simple analysis of the grass to be outside the system. And he's saying the lunatics all walk on the path, right? And Godin is questioning the entire system from the ground up. It's all driven about obedience, 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 obedience. How do you have a nice life if obedience is what guides you? How does it manifest itself? Textbooks. Buy a textbook. Follow the rules in the textbook. Don't think for yourself. Just follow the rules. School's a factory, people. Why do you think so many people have a hard time breaking out to a new way of thinking on making money? They have been indoctrinated into a buy and hold, mutual fund, panacea, scam, ruse, Ponzi scheme. Frankly, alien anal probe is what it really is. Okay? It's insanity. So Godin goes on in his presentation to kind of bring out a bunch of blocks, and he throws a bunch of blocks on the stage. And he says, with all these blocks, you have a letter on it. You can have a million different possibilities. There's no right answer. And the average adult today just goes crazy because there's no right answer. They can't deal with the uncertainty, the inability to control the situation. The average adult just breaks down and says, Mr. Fidelity, here's my money. I'll believe whatever you've told me. You're kind of like Willy Wonka in the chocolate factory. Let's go. You're a superstar. Here, just manage my money. Do something with it. I'll die soon. Life will be over. I'll pass it along my heirs. And then, Uncle Sam will take 50% from whatever kind of death tax. Goes on and on and on. Look, school is about memorization. That's what it's about. Are you going to collect data or connect data? I'm stealing that line from Godin. Are you going to collect data or connect data? And he goes on to kind of conclude. He says, fitting in gets you nowhere. Fitting in gets you nowhere. Standing out gets you everywhere. And so as I look at my morning podcast and I think about what I wanted to talk about, all of that is a lead up to a fantastic white paper that was forwarded to me in the last 48 hours called A Century of Evidence on Trend Following Investing. Goes on to say, we study the performance of trend following investing across global markets since 1903, extending the existing evidence by more than 80 years. We find that trend following has delivered strong positive returns and realized a low correlation to traditional asset classes each decade for more than a century. We analyze trend following returns through various economic environments and highlights the diversification benefits the strategy has historically provided in equity bear markets. 1903. Do you realize right now nobody else out there on the planet is bothering to do a podcast that is questioning the entire educational system, telling you that the mutual fund system is a Ponzi scheme designed to rip you off and steal all of your money, and giving you an alternative that has got a absolute boatload, motherload of performance that if you don't know about, I really have to start to question. I know sometimes I talk about masochism, but I really think that there are some people out there that enjoy cutting themselves. They enjoy the feeling of cutting themselves and watching themselves bleed. They enjoy it. It's exciting to them. Let's hurt ourselves. Let's bleed on the floor. And then we can all sit around, hold hands, sing Kumbaya, and never get anywhere. Once again, Roger Waters, correctly analyzing the walking on the grass. Don't you see the connection with trend following and the mutual fund? Trend following is all about standing in the middle of the grass and tearing it up. You don't learn to be a trend following trader in school. It doesn't happen. It doesn't exist. There is no school for trend following trading. Well, actually, that might be slightly untrue. I'll train you. I'll teach you. You need help? I'll show you. That's what I do. I'm going to read some highlights from this trend following investing report. This is fantastic. White paper. As an investment style, trend following has existed for a very long time. Some 200 years ago, the classical economist David Ricardo's imperative to cut short your losses and let your profits run on suggests an attention to trends. A century later, the legendary trader Jesse Livermore stated explicitly that the big money was not made due to the individual fluctuations, but in sizing up the entire market and its trend. This paper seeks to establish whether the strong performance of trend following is a statistical fluke of the last few decades or more of a robust phenomena that exists over a wide range of economic conditions. Using historical data from a number of sources, we construct a time series momentum strategy all the way back to 1903 and find that the strategy has been consistently profitable the past 110 years. 110 years. Who on CNBC has taught Bloomberg, CBS Market Watch, I don't care, Yahoo Finance, who in blazes has talked about the style of trading that I've written 4 books about, that I've made a film about, that I've dedicated my life to, that's been successful for 110 years. The data to back that statement up exist. White paper on my website right now. Download it. Continuing. I'll read a little bit more of this. It's just fantastic stuff. The performance has been remarkably consistent over an extensive time horizon that includes the Great Depression, multiple recessions and expansions, multiple wars, stagflation, the global financial crisis, and periods of rising and falling interest rates. Skeptics argue that it has benefited mainly from the long secular decline in interest rates. While the strategy did perform well over the last 30 years, the best performing decade for the strategy occurred between 73 and 82. Our long-term out-of-sample evidence suggests that it is unlikely that such price trends are a product of statistical randomness or data mining. Indeed, the first 8 decades of data is out-of-sample evidence relative to the literature, and the performance is strong in each of these decades. Trends appear to be pervasive characteristics of speculative financial markets over the long term. Trend following strategies perform well only if price trends often more than not. A large body of research has shown that price trends exist in part due to long-standing behavioral biases exhibited by investors, such as anchoring and herding, as well as the trading activity of non-profit-seeking participants, such as central banks and corporate hedging programs. Once again, it's making the case. You're hearing it. It's the zero-sum nature. This is it. Look, hold on. I got to find the back piece of this. There's a back piece. Well, you can see it in the report, but it talks about, I think it's like 59 markets that they've looked at. We're talking everything: currencies, agricultures, interest rates, stocks. 1903. What was going on in 1903? It was like their first version of a car. I mean, the Fed did not even exist in 1903. I actually went back, and I've mentioned this before, I went back and looked at old economists back to the late 1800s to look at price data, went to the National Agricultural Research Library in Beltsville, Maryland, and got inside the stacks and saw these old, just to look at price trends, inspired by other trend following traders who had done the same thing. I know David Harding's shop has done this. I know John Henry's shop did this at one point in time. To go back in time and look at the price data and say, does this work? Now, this firm that did this white paper that I'm mentioning is called AQR. They've done the same thing. So, as I sum up, I want you to really think about Roger Waters, his story of the grass, looking at the grass that you couldn't touch. I want you to think about what Seth Godin is saying in terms of education. And I want you to think about the trend following performance, something that I'm putting on the plate today, massive performance back to 1903 that you cannot find in a college classroom, period. Not a high school classroom, not a college classroom, not an MBA program, not a PhD program. It does not exist. Why? Why doesn't it exist? Why is this fantastic performance that has a chance to change your life, that gives you the opportunity to make more than your neighbor, that gives you the opportunity to make more money than those people that refuse to walk on the grass, that gives you more money than the people that Seth Godin talks about, who frankly are byproducts of an educational system designed to create factory workers, designed to create biological life slaves that just sit in a vat of stew of their own whatever. And then when it's all over, you're gone. Unless you're reincarnated, which I guess could be the possibility. But if you don't reach enlightenment, I don't think you get to choose the physical form that you get to come back in, if I'm not mistaken. Isn't that right? You have to reach enlightenment to actually choose what you can come back as. So if you go through life connected to the matrix, if you never walk on the grass, if you never question the educational system, if you never find an investment strategy that beats the buy and hold slave-like process that you're currently affixed to, how do you ever get enlightenment? You're just going to come back as a rock or a stick or a piece of dirt. This is it. You think I'm completely crazy. I don't know. Who knows? Maybe this is the case. If you don't reach enlightenment in this lifetime, you don't get to choose how you come back. You might have recognized that first episode, reaching back into the archives, pulling forward to 2017. One of my favorites, Roger Waters. But that's not it for today. Staying a little closer to home, not that long ago, I want to connect a second monologue that I really enjoyed doing. Let's jump right in. That song was number one in America, May 25th, 1959. A date that means absolutely nothing to me. I wasn't born. I sure as hell had no idea that there was anything relevant to the subject of trend following on May 25th, 1959 in Time magazine. Now, the song has nothing to do with Time magazine or what I'm going to talk about. I just looked it up and it happened to be the number one song when this issue of Time magazine came out. Why am I talking about Time magazine? May 25th, 1959, there was an article titled Pass de Dough. P-A-S-D-E dough, like money. Pass the dough, pass the money. I had to spend my $3 on the Time magazine website to get access. And boom, I now have probably one of the first trend-following articles to ever appear in a major publication in America. So how did this random event in my life start? Ira Schumann, a gentleman residing in Washington, D.C., randomly sends me an email the other day. In that email, he includes a scan of the front and back cover of a book, How I Made $2 Million in the Stock Market by Nicholas Darvis. I've heard of this book for years. I've never read it. I've read about half of it right now. I get the picture. I know what it is. It's trend following. But Ira sends me a scan of the front and back of this book, How I Made $2 Million in the Stock Market, and one other book by Nicholas Darvis. And the quote on one of the backs of the books, such a just grab you and say 1959, trend following, it's not new. Quote, the only sound reason for my buying a stock is that it is rising in price. If that is happening, no other reason is required. If that is not happening, no other reason is worth considering. End quote, Nicholas Darvis. So brilliant. So brilliant. So prescient. There it is, the wisdom from 1959, applicable to 2015. Trend following in a nutshell. Sure, you need a system. But if the market is not going up, nothing is happening. You don't have to have another rationale. You don't have to dream up what the next signal is going to be, what the next prediction is going to be. Someone wrote me the other day. They said, can you send me your favorite indicators, your favorite analysis for predicting where the market will go tomorrow? I wrote back and I said, I have never met anyone that talks about having a way to predict tomorrow. And I've met some of the best traders of the last 50 years. Personally, they never talk about that. The Darvis book intrigued me. I've seen it mentioned throughout social media, forums, blogs, frankly, for the last 20 years. Maybe I was turned off by the title. The title's kind of How I Made $2 Million in some short amount of time. I just never connected the dots that it was a trend following type thinking. And if I go to the Wikipedia page for Nicholas Darvis, there does seem to be some controversy about how much money he made. Back in 1960, there was an investigation that perhaps the 2 million was not the accurate figure. Hell, we are not going to have any way of figuring that out today. But it's terribly interesting that a self-made man, a self-made individual who is a professional dancer, in his spare time, starting down the path of using fundamentals, listening to tips, listening to brokers, all of the mistakes that people go through, this man made. He made them all in spades. And his book is about those mistakes and leading to a path to where he starts to understand how it all works. Let me quote a passage from the Time magazine article, 1959. Moneyman Darvis's methods would raise the eyebrows of most Wall Streeters. Instead of studying what Wall Street calls the fundamentals, price-earnings ratios, and dividends, he judges public enthusiasm, a method that works best in volatile markets. In my dancing, I know how to judge an audience, he says. It is instinctive. The same way with the stock market. You have to find out what the public wants and go along with it. You can't fight the tape or the public, end quote. You can see the philosophical foundation of trend following. I just find it so damn cool to be sitting here reading an article from 1959, timeless. Absolutely 100% timeless. And such a vast majority of the population would hear Time magazine article 1959, that has no value for me in making money in 2015. They would just dismiss it summarily. We all know those people. Now, just as a side note, that's one of the reasons trend following will always continue to work. Let me continue from the Time magazine article. Darvis' system is tailored to his job, since he has to do trading from wherever he is dancing. He recently completed an Asian tour. He ignores tips, financial stories, and brokers' letters, and has never been in a broker's office. What another great aspect of the lessons that we can learn from 1959 and 2015. Location independence. You can be anywhere. You could absolutely be anywhere to be a trend following trader. It does not matter where you are. I am being 100% dead on speaking the truth. To beat home a point that some of the greatest myths, some of the greatest holy grails of Wall Street, the necessity to be close to the action, the trading floor symbolism, being down in that pit, that's where you need to be. Well, first off, the pit doesn't exist anymore. Point one. Point two, even if you look at one of the most successful pit traders ever, Richard Dennis, and he did make his first $1 million in the Chicago pits, no doubt about it. But the vast majority of his fortune, it was being a trend-following trader off the floor with the turtles. That was where all the money was made. And again, even if you wanted to say, well, Mike, that's great about the trend following, but I like the short term. I like the trading floor. That stuff doesn't exist anymore. It's gone. And are you going to compete against high frequency traders? Are you going to find server location close enough to the exchanges that you can beat out the other people that are spending hundreds of millions of dollars on infrastructure to trade at the speed of light? I digress. Back to 1959, Time magazine, continuing. Darvis places his buy orders for levels that he considers breakout points on the upside. At the same time, he places a stop loss sell order just below his buy order, so that if the stock does not move straight up after he buys, he will be sold out and his loss cut. I have no ego in the stock market, he says. If I make a mistake, I admit it immediately and get out fast. Darvis thinks his system is the height of conservatism. Says he, if you could play roulette with the assurance that whenever you bet $100, you could get out for $98 if you lost your bet, wouldn't you call that good odds? If he has a big profit in a stock, he puts the stop loss order just below the level at which a sliding stock should meet support or an exit signal. He bought Universal Controls. I have no idea what stock that is. This is 1959, people. It's probably no longer around. He bought Universal Controls at 18, sold it at 83 on the way down after it had hit 102. I never bought a stock at the low or sold one at the high in my life, says Darvis. I'm satisfied to be along for most of the ride. Damn straight is that trend following. He just sums up trend following. Wham, bam, thank you, ma'am. Right in the solar plexus, right in the gut. One big kick in the ass. There it is, trend following. I'm not even sure why I'm so excited today. I just think it's damn cool to be reading an article from 1959 that's talking about trend following the exact way that I would write about it today. Continuing in Time magazine, the biggest factor in stock prices is the lure of future earnings. The dream of the future is what excites people, not the reality. And there he sums up so nicely why relying on fundamentals is fool's gold. You have a fundamental view about what's going to happen tomorrow? Bullshit. Oh, you might think you have one, but it's bullshit. And deep down, you know it's bullshit. Deep down, you're just trying to sell some other sucker that your fundamental view, your prediction will work. And the selling of the sucker is just a way for you to make money. Oh yeah, don't get me wrong. My name is Mike Covel and I'm trying to make money too. No doubt about that. I'm a capitalist through and through. If they have some description beyond capitalism about making money, I'll put myself there in the truest Ayn Rand sense. And for those of you that hate Ayn Rand, I don't give a shit either. But the bottom line is, if you're going to be a capitalist, if you're going to give people insights, then give them the honest information. And every last person right now today that comes on a finance channel, goes in a finance newspaper, anywhere that can be seen by the public, and purports to know what's going to happen tomorrow is absolutely selling you a dog with a bad heart, a dog with a broken leg. And if you can't control your own emotions enough, if you can't understand that you're being sold the used car, if you can't see that, Well, my friends, I have no sympathy for you either. It's the greed and fear thing at work. It's the reason that Darvis's writings, that Darvis's thinking in 1959 will still be applicable today and into the future. It's the reason when I look at AQR's work, or Capital Fund Management's work, or David Harding's work, or Larry Height's work, and all four of those firms that have major trend-following components today in 2015 have written white papers in the last few years describing how trend-following performance goes back centuries. That's centuries with a C, hundreds of years. So I guess by that comparison, the 1959 article in Time magazine about Nicholas Darvish should not have me so excited. A few other great lines from his book. I just jog along with the trend trailing my stop-loss insurance behind me. There are no good or bad stocks. There are only rising and falling stocks. I knew nothing about it, nor could I find out very much. Yet I assumed from its continuing rise in high volume that some people knew a lot more about it than I did. In the same way, I decided that if a usually inactive stock suddenly became active, I would consider this unusual. And if it also advanced in price, I would buy it. I would assume that somewhere behind the out-of-the-ordinary movement, there was a group who had some good information. By buying the stock, I would become their silent partner. What a great way to also reframe the thinking, to reframe what trend following is. You are the silent partner on the trend. You do not know why the smart money is pushing the market or moving the market. You don't know and you don't care. You are the silent partner along for the ride. I just got back from Beijing within the last few weeks. I spoke to over 1,100 people. Check out my monologue about going to China if interested. Not trading related, but gives a great insight into China. One of the things that I talked about with my new friends in China, and this was on June 20th, with the Shanghai index at just about all-time highs, I said, if it keeps going up, buy it. It's in a bull market. Of course, everyone loves that. But in the very next breath, I said, but if it goes down, and you have to know when your going down point is hit, if it goes down and it hits a point, you have to get the blank out. Well, roll forward a few weeks, and the Shanghai is now down 20%. I surely hope some of my new friends in China had an exit strategy, because all the stops were hit. Darvis, 101, 1959. Roll forward to 2015. It's all applicable. Nothing changes. People are the same. Life goes on. Just the question becomes is how are you going to play it? How are you going to make it happen? What rules are you going to follow? Or are you going to be at the mercy of the silly talk? You could be all panicky about Greece. What's going to happen with Greece? I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you. And that's my own little perversion, so to speak. I sure as hell am not going to apply money off any of that analysis, though. Because my analysis of all of those events is worth absolutely nothing just like your analysis of those events is worth absolutely nothing. The only analysis that's worth a damn thing, just like the Shanghai Index example that I just mentioned, is the price analysis. If the price is going up, great, you're long. If the price is going down, great, you're either out or you're short. That's it. Yes, it gets a little more complicated than that. Yes, you need rules. You need a complete exit strategy. You need to have a strategy for how you select your portfolio. You're not going to trade every market. You need to have a strategy for how you're going to size your position. How much are you going to bet on every trade? You can't bet unlimited money because you don't have unlimited money. So how much capital are you going to bet of your limited capital? Yeah, you better think that through before you get into the game. The game's always going to be there. So just be patient, get your rules together. For example, read Darvis's book. We all don't have enough time to make all the mistakes that we could possibly make in our lifetime. The smart people avoid making some mistakes and learn from the mistakes of others. That's progress. Now, you can be a little cocky about this. You can be a little egotistical about this. And you can say to yourself that I have to learn all of my mistakes on my own. Well, yes, you can do that. Good luck. Best of luck to you. A few more bullet points from Mr. Darvis, summing up some of his thinking and his lessons. He describes his box technique, which was very similar to a breakout. Number one, this experience, as I see it, was an important turning point of my stock market career, this boxes thinking. Number two, it was at this point that I finally realized that. Number three, there is no sure thing in the market. I was bound to be wrong half of the time. Number four, I must accept this fact and readjust myself accordingly. My pride and ego would have to be subdued. Number five, I must become an impartial diagnostician who does not identify himself with any theory or stock. Number six, I cannot merely take chances. First, I have to reduce my risks as far as humanly possible. 1959 is 2015. The circle's unbroken. It's all the same. Good technique then is good technique today. There are many forms of trend following trading. The example that I talk about today with Nicholas Darvis is just one. His box theory. Very similar to a breakout or a Bollinger Band. Very similar. But as I say that, remember, this is about a complete trading approach, not just getting fascinated or excited with some sexy indicator. Please don't do that. But once you have that approach, once you've settled on your system, now the game has really just started. Because once the system is in place, and please go back and listen to my most recent podcast with Ed Sakota, we go straight into the psych issues, the mental issues, the emotional issues. Because once you have that system, whether it's Darvis's trading system or some other trading system, the mind quickly becomes paramount. Your mind, how you handle your daily life. How do you navigate the stresses? How do you navigate the onslaught of information coming at you? That was part of the genius of Darvis, was figuring out a way to block out all of the noise, the extra information, the information that was irrelevant, not important, simply not useful. But this is not easy. The mind game is difficult. One of my favorite voices to offer insights into the mind has never been officially associated with anything to do with trend following trading. Alan Watts introduced Eastern philosophy to the West. And the way that he introduced Eastern philosophy is timeless. You might be saying to yourself, Mike, but I don't want to talk about religion. Guess what? I don't want to talk about religion, and I'm not talking about religion. But as you move into using your trading system, the concept of worry on the mind, will be front and center. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.